How to get clients to pay up. Sometimes you need to use specific tactics to demand payment from a client. If the business won't pay after you have completed your project, sent an invoice, made 2, 3, 4 phone calls, what do? Wait, and wait some more? Or take things in your own hands and ensure you get your cash on time. The sad fact is that most independent contractors, freelancers, and even small business owners can have difficulty getting paid. Some clients feel free to pay late, others never pay at all. Watch this video to learn how to mount a collection strategy to get your deadbeat clients to pay. Welcome back, folks, to another edition of Sweetie Kiwi. How you doing today? I hope you are doing fantastic. I'm doing marvelous. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today, I want to talk to you about how to get clients to pay up. Number one, let's talk about how to demand payment amicably. First, you want to send a letter. If the client hasn't paid within the deadline you've given them, by the deadline rather, send a letter. Your first step in collecting an unpaid bill should be to send a statement or a collection letter requesting payment of the invoice. Some firms will wait for 60 or 90 days to pay bills because of cash flow problems of their own. So if your clients follow this practice, sending a routine collection letter might prompt them to put the check in the mail. Because sometimes clients just, they have liquidity problems. There is a mismatch in terms of cycle between when they receive money from their customers and when they have to pay their suppliers or service providers. So it's just part of business. Sometimes they can even forget. So sending a letter, a normal letter, collection letter, can be very effective. Number two, get personal. So after sending the letter, if it doesn't work, you want to get personal. So it's a lot harder to withhold payment from someone you know than from a stranger. For this reason, don't rely solely on successive collection letters. Instead, call the clients. If you are dealing with a large company, you may have to first contact someone in the accounts payable or purchasing department. But if that person isn't helpful, don't hesitate to call higher ups, including the president of the company. You heard me, the president of the company, because at the end, ultimately, what you want is getting paid. That's all. You're not there to be worried about calling the higher ups. No, call you can call the CEO, the CFO, or the CIO. It doesn't really matter. Call all the C's, right? So explain that cash flow is important for your business and that you cannot afford to carry this unpaid receivable any longer. So if phone calls don't work, you want to make an appointment to personally visit whomever is in charge of paying you. Right? So you got to get personal. The third thing you want to do is be persistent, because when it comes to collecting debts, you have to understand that the squeaky wheel usually gets paid first. That's just the way things work. So a client who is struggling financially and has only enough money to pay one creditor will likely pay the one who makes the most fuss. It's just that easy. Don't worry about it because you sent a letter in the first place. You got personal. You were polite. Now you got to be a little persistent. Now, I'm not telling you to create some kind of drama here. No, you want to be very strategic. You want to respect. You want to comply with business etiquette. Be very courteous and very polite, but persistent. You want your money. You want your money. So don't lose your temper. Never make threats. And don't harass the clients, because this kind of behavior will get you into legal trouble and you might lose an otherwise great clients. So if letters, phone calls, and personal meetings don't get you what you need, you have a few other options, and I will tell you in the next section. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are also talking today around how to get clients to pay up. And in the first section, I was telling you how to demand payment amicably. So getting personal, sending a letter, and being persistent and trying to meet one of the executives at the company. Now let's talk about formal methods of getting money from your clients. But before I do that, if you love the content's clarity and quality so far, please consider subscribing to our channel and turn on the notification bell so we can inform you in real time whenever we drop a new show. And we do this kind of shows every single day, rain or shine. Now let's talk about this. Let's talk about don't forget, please like this content, comment below, and share. We want to reach as many folks as possible. A lot of you have gazillions of independent contractors and freelancers and even small businesses in the business owners in the United States who have difficulty getting paid. So this kind of content is very helpful. Now, let me talk to you about formal methods of getting money from your clients. If you know the client has the money to pay you, or you think the client will have the money sometime in the future, never give up. There are various legal means available to collect debt. You can sue the clients in small claims court. Now, that's an effective route to choose if the debt is not too large. So you can sue the client in small claims court. All states have small claims court that are set up to resolve disputes involving relatively modest amounts of money. So the limit normally varies between $2,000 and $7,500 depending on your state. If you're owed more than the limit, you can still sue in a small claims court and waive, that is, give up your right to collect the amount that exceeds the limit. Small claims court is particularly well suited to collecting small debts because it is rather inexpensive and fairly quick. In fact, debt collection cases are far more the most common type of cases heard in small claims court. And the great thing is here that you don't even need a lawyer to bring your case. Indeed, a few states, including Michigan, California, don't allow anyone to be represented by a lawyer in small claims court. So you can file a suit. You can file a suit in the small claims court, and if you do so, and your client doesn't show up when he or she is supposed to, you will win by default. So a substantial percentage of clients don't contest claims for unpaid fees in court because they know that they owe the money anyway and cannot win. Now, if that doesn't work, you can sue the client in superior court. So that is another option, which is rather preferable, if you will, if the client owes you substantially more than the small claims court limit for your state. Right? So if that's the case, you may wish to sue in a formal state trial court, usually called the municipal court or superior court. So debt collection cases are often very simple, so you can probably handle them yourself or hire an attorney for the limited purpose of giving you advice on legal points or helping with strategy. In truth, few collection cases ever go to trial, if you think about it, because generally the defendant either agrees to settle before trial or fails to show up in court, which gives you a default judgment for the amount owed. You can sue in small claims court, you can sue in superior court, or you can take the client to arbitration. This is also a viable option here. Before you sue the client in court, be sure to look at your client agreement to see whether it contains an arbitration clause, right? Because this type of provision, it's usually called arbitration or dispute resolution. It requires you to submit any disputes with the clients to arbitration rather than going to court. Now, if your contract has such a clause, you'll be barred from suing the client in small claims court or any other court. This is not necessarily a bad thing because arbitration is similar to small claims court because it is intended to be very speedy, cheap, and informal. The main difference is that an arbitrator, not a judge, rules on the case. An arbitrator's judgment can be entered with a court and enforced just like a regular court judgment. This is really something you have to pay attention to. All right, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I hope you are still having fun and paying attention to today's conversation. So we're talking about how to get clients to pay up. So now, at some point, if you've tried taking the client to arbitration, you've tried suing the client in small claims court or in superior court in your state, and nothing is happening, at some point you have to think about giving up because it's all about investment and return. You're investing your time, you're investing your energy, your resources, and you got to ask yourself, am I getting a negative return here or a positive return here? So let me talk about when to give up. So if the client has gone out of business or vanished outright from the face of the earth, or you know that he or she will likely never be able to pay you anything, either for now or in the future, your best option may be to write off the debts. I know this could be painful. I understand cash is tight, but you got to write it off. You got to limit your losses. You got to cut your losses at some point. As the old saying goes, you cannot get blood out of a turnip, and you shouldn't throw good money after bad. Unfortunately, if your business provides only services, you can't take a tax write-off for the bad debt. So the rationale here behind this rule is that it will be too easy for independent contractors to inflate bills and claim large deductions for bad debt that were never really incurred. So if any part of the bad debt is for goods, however, you can deduct the cost of goods that the client received but never paid for. This is we have an entire show that will cover this topic about bad debt, and just look out for that show when it comes out so you can just explore that option with us. We will, our team has done a lot of research around IRS rules, around what the best practices are when it comes to writing off bad debt. So we'll cover this topic in details in that show. All right. So this is the end of today's conversation. Let me quickly wrap up what we talked about here. How do you get clients to pay up? I first explained to you how to demand payment amicably within the rules of business etiquette. So you send a letter, you get personal, you get persistent, you try to meet people face to face, and then you have formal methods of getting money from your clients. So you can sue the clients in small claims court, you can sue the clients in superior court, or take him or her to arbitration. And in the third section, at some point you gotta give up. You gotta ask yourself, is this fight worth it? And either take a loss, like a real loss, and not be able to write it off as a tax debt, or write it off and be able to take it off on your tax return. I'll be right back next time. I love you, and I will speak to you another time. Until then, remember, stay marvelous.